Hello fellow human, nobody here. Today's question is, should you buy Amazon shares? As always, I will jump straight into my verdict and I will give you my reasons afterward. Let's go. Amazon stock is today most definitely a buy. My price target is between $250 and $340. So this is the range I judge shares should be trading at in the short term. While I do not expect the stock to fulfill this upside of more than 35% in just a few months, it does provide a huge margin of safety. So you can be confident that you're buying the shares at a discount relative to the price they deserve. But as you know, discounts don't last forever, and least of all for the share price of one of the largest, most successful companies on the planet. Why so bullish? Let me explain. But first, time for a little disclaimer. If you're watching this, I assume you're not a lemming, but a sovereign individual. Nobody can tell you what to do with your own money. I only provide you the tools to take financial matters into your own hands. You alone are responsible for where you place your time and money and trust. So no, this is not financial advice. This is just how nobody invests. Amazon is the king of e-commerce, a leader in cloud computing, has a lucrative advertising business, and has been expanding successfully its subscription-based offerings, amongst other things. But the stock has returned over 1,000% in the last 10 years. That is 27.4% per year. If you bought $1,000 of shares 10 years ago, you would now have $11,000. Is that remotely justified? Seems unlikely, doesn't it? Well, intuition can be treacherous, so we better take a look at the evidence. In the past 10 years, Amazon's revenue and earnings have had a spectacular rise. Revenue increased by 22.7% per year, while earnings had been almost non-existent for many years and exploded as the company started to prioritize the bottom line. While the company never had any real profitability issues, its strategy of reinvesting everything into an expensive commercial infrastructure made the bottom line look weak and left many people wondering. To the long-term visionaries managing the company, there was never any doubt that everything was going extremely well, of course. Now, with the surge in earnings, no one should complain. But they will, because people. Revenue growth was particularly strong between 2017 and 2021, and it has slowed down significantly since then. For the coming 3 years, analysts are expecting the company to grow revenue by just 11.1% per year, and earnings by an average of 37.4% per year. For the stock to deliver returns higher than a modest 11%, revenue multiples would need to expand. And that is exactly what I'm counting on. When a company is in growth mode, revenue growth and gross margins are pretty much the only things that investors can use to measure the company's performance. But when the company starts to mature and the bottom line expands, we can and should focus our attention on earnings. And Amazon is certainly delivering on that front. As you can see, revenue multiples are already slightly above average, while earnings multiples have gone down massively. This trend should continue as the share price needs to reflect earnings growth, but revenue is very unlikely to grow as fast. Relative to the expected earnings growth, the stock is cheap, with a PEG ratio of only 1.1. A PEG ratio closer to 2 should be expected for a company so large, so well managed, and growing into increasingly profitable areas. Still today, some people seem to think of Amazon as a company of questionable profitability. To give you an idea of how false this idea is, just in the last 10 years, the gross margin for the entire company went from 27% to 47%. And the net income margin? Well, we already saw the surge in earnings. And that is pretty much all you really need to know about Amazon. I'm sorry I cannot waste any more of your time. The stock is cheap and the future growth looks solid. The management has proven itself for many years and has the resources and the vision to keep investing where it is best. Personally, as a happy customer, it's particularly pleasant for me to stay invested in the company. If you found this video only mildly upsetting, please like it and subscribe to the channel for more. Share your thoughts in the comment section and let me know which stocks and concepts you would like me to explore in the future. If you have any questions, just ask. And until the next one, remember, if nobody invests, so should you.